I got a day job. So if you're doing like a New York session,
Yep.
I'll be at work.
Ah, okay. I see what you mean. You got a new job. Okay. It's okay. We'll
Yeah,
work something out afterwards.
yeah, I'll be at my work when you're doing your New York session.
Yeah, that makes sense. That's okay. Okay. Do you see my screen?
Yeah.
Cool, cool. All right. So today we're going over the daily cycle. It's a
Okay.
constant pattern that kind of happens every day, and the factors that are involved in the daily cycle. So we got time and price, got momentum, and specifically the Asia session. Okay. So let me go over
Yeah.
this. The daily cycle is a way to see the market in a form of a pattern that repeats itself. Okay. So essentially, it's a cycle. So it happens in its own version every day. Okay. It
Mm.
utilizes liquidity hunts, momentum, and time for us to understand the purpose of each session. So we've got four sessions, and they are Asia, we got Frankfurt, London, and New York. So in a day, we got those four. We have purpose for each session, which we'll go through and find. And there's three specific Asia types, which are super important, which we will also be going over. So first things first, let's go over the sessions and kind of what their purpose is and what they do. So Asia specifically is a big one. It's important to analyze this. It can create a model for New York and London. So a kind of a liquidity model in a sense, creating a liquidity above and below its session. So often I don't trade Asia. I never really trade Asia really, but I utilize Asia for my London and New York trades. Okay. Do
Okay.
you trade personally? Do you trade during the day or do you do swing trading?
I trade during Frankfurt, London, because as I say, right,
Yep.
if it's a holiday and I'm home, then I'll trade New York. But I'm not a New York trader. I'm just into like Asia, Frankfurt, London.
Okay, okay, that's okay. Well, I mean, in the way that Asia's set up, it's really good for London because London comes straight off Asia. You know what I mean? Even Frankfurt,
Yeah.
right? So Asia, right? Often price will aim to take a higher low or both, where we get an Asian whipsaw, which we'll go over. Starting with Frankfurt, so Frankfurt might raid Asia high or low, um, and London open. Either one usually does it. Okay, as our manipulation of Asia. If Asia takes a form of liquidity and is impulsive, creating an order block, you can play a continuation trade from an Asia zone, which we'll go over. Frankfurt often prepares London for its main movement. So Frankfurt sets London up for its open or its magic minute mitigations, but it usually does this for London specifically. Okay, if it does this by taking out the high or the low of Asia to create an order block mitigation for London, creates more phase one inducement for London to take out. So we'll go over that, but essentially we just create a further setup for that London Open. When London opens, there's a volatility spike in price. London's purpose is to attack that liquidity created during Asia. Okay. Often, London creates a continuation mitigation after 1.5 hours, which we'll go over, which is our magic minutes mitigations, but can also contribute to a larger liquidity build up for New York. So maybe London won't actually be tradable and it might build up from Asia, creating a bigger move for New York from a higher time frame order block. So we'll also go over that. Entries that induce and mitigate can be taken at the open. Okay. Now pre-New York is in the session, but it's also a setup for New York. So we can think of Frankfurt as our pre-London, and we just say pre-New York as for our New York. Okay. So before New York opens, we often see an impulsive move that directly contributes to the New York session. Sometimes we can create a valid zone for New York to play from, so we set that up for New York. But most often we see an impulsive move in price at pre-New York. So often pre-New York will push price to an order block for New York to mitigate and play from. So like I said, it contributes to New York. So the prior time before those session openings are very important, okay? New York, we often open with a volatile shift in momentum. New York, quick to attack liquidity created during the London session, or creates a continuation from the London. So either way, you can have 2 outcomes. We have a New York trap time that starts about 1 hour to 1 hour 30 after opening and reverses. So after an hour and a half, we might see a reverse in price from New York's opening move. So it takes out kind of 2 forms of liquidity just in an hour or so. So it is very impulsive. After 1.5 hours of opening, which is our magic minute mitigations, we often see a clear mitigation of the correct order block and liquidate the opening move. Okay. These times are in Australian times, just from the ebook. But here, I won't go through the times because they're all separate for everyone. But essentially, Frankfurt's an hour before London, and then we have our London opening, which is our big shift, and then 1 hour later we have our trap timing. Now, magic mitigations are kind of algorithmic price times in which price will mitigate the order blocks created during these sessions. Okay, so so for London, we usually have like an opening order block that can form, which is just 30 minutes. But often 1.5 hours is the perfect time where we'll see that. So an hour and 30 minutes after the open of London and New York as well. Okay. So this is a basic look of what a day will look like.
Those minutes, right? Can you convert them to Eastern time? Because I carry Eastern time. That's the problem with those, right?
Yeah, exactly.
I need them like converted to Eastern time because I carry Eastern time.
Well, you know what? I can do that for you. I can convert them all for you if you'd like. Yeah, they all convert to whatever time, but the timing's always consistently the same. So I'll do that for you. I'll convert them to Eastern time for you. So this is what a day will look like with the sessions. We have our Asia session, we have our Frankfurt session just before London. Here we have our London session. Pre-New York here is that white space where it's not a session timing, but it's a contribution to New York. New York opens, nice sweep, and then we have our New York. So that's a basic, kind of a cycle of how we'll look every day with sessions. Here
what's the name of the cycle?
What's the cycle? We're just about to go over it. So there's 3 main variants. We're just about to go over it, but this is just the sessions, okay? Here gets a little bit more advanced, but it's an example of what a day can look like. A ping pong day, they say. So when it's ping pong, it's take advantage of buyers, sells, buys, etc. It's not just having a bias. That's usually when we're encapsulated in a range like this with a high and a low. Asia in here, of course, acts as a liquidity source. So in this case, this is more an example, but a way in which we can take advantage of buys and sells within just the daily cycle. Where Asia acts as a liquidity source, we manipulate the lows of Asia, acting as our phase 1 for this zone. Here we follow our low time frame entry, which we'll go over next lesson, where we have our phase 2, our vector level, we mitigate, we can get buys, and then we enter another zone where the top of Asia is used as an inducement level for this zone, where we manipulate that, have our lower time frame entry, and we can take sells. Now, the important idea with this is that once this high and this low mitigate, everything in this range becomes mitigated because this here was mitigated by here after we manipulated here. Same thing, this low was mitigated here after we manipulated here. So once we have a final manipulation, our price target is here, in which we might have an inducement for a zone below that. And that's kind of how that market works for that rating of liquidity, where we constantly are looking for the end of those mitigation cycles. So we'll go over that a little bit more shortly, but this is a broad spectrum. Also important to note is efficient price action and inefficient price action. Main idea is you can't re-mitigate an already mitigated zone. This mitigate this to this to this to this. So we know that once price breaks the first level, we're going to run all this price action, okay? We can't react off a zone that's already been properly mitigated. Here we might have inefficient price action, and inefficient price action is where we leave imbalances in the market. So we come up, we push into the imbalance, create a valid order block after hitting a pullback zone, and then creating continuations. So why is Asia type so important? So Asia type in the way that there's 3 different types of Asia setups, 3 different variants. But essentially, Asia structures our trading day by setting up the liquidity for us to understand which inducements we'll be taking out during which session. So it's that kind of that setup that it gives us for the day. So that's why it's really important to analyze what's happening with Asia. So our 3, which we'll go over down here, but quickly, they're impulsive order block creation, where Asia mitigates our high volume orders. We can have Asia add to phase 1 inducement, so it just becomes more of an inducement for a zone above or below. Or we can have an Asia whipsaw, where we take out the high and the low of Asia impulsively. Okay, so 3 main types.
Are you going to show me the examples of those?
Yep, and they're down here, so we'll get into them. Okay.
Okay.
So some Asia session characteristics. Okay, so we want to analyze how Asia moves during the time Asia is actually going on, because this will give us that framework of understanding, especially for London, in which you trade, right? So we can think of it like this. If we're moving in an uptrend during Asia, so an uptrend, we're actually inducing buying because we're creating a liquidity buildup. So essentially, we can think of it as efficient price action move up, find that kind of trend line buildup that it's creating so we can take that move, right, and manipulate Asia. So if it's moving up, we have a bias to go down. Same thing when we're moving down during Asia, we have a bias to go up because everything becomes mitigated during the Asia session. So Asia can either act as a liquidity source for London and New York with its high and low, or it can sweep and mitigate high volume orders to create a continuation order block. So it's kind of the main idea for Asia, if you want to simplify it into 2 things. A little bonus is that if Asia's movement is 40 plus pips or so we have big movement in Asia, we often create impulsive kind of order block from Asia. So if Asia's moving very high or low, it means we probably mitigated those high volume orders from the left, so we can play from Asia itself instead of wait for it to rate a high or low and then manipulate, because it's already manipulated in a sense. So some tips. If we do not create, sorry, go on.
You got to show me some example of those.
Yeah. I do have to show you examples because you can't really just talk about it, and that's fine. We'll get into that. Some tips with Asia. If we do not create inducement after mitigation of our order block, we'll likely be heading to a smaller opposing target and liquidate this leg. I'll have to show you an example of that. I'll come back to this, okay? But once again, the 3 types, we got build up, manipulation, continuation, essentially just saying that we're adding to our phase 1. So we fail to mitigate high volume orders and instead create more mitigation inducement for the order block. Well, let's look at what this is trying to say, okay? Well, sorry, just give me 1 sec. So essentially, in this case, Asia is acting as inducement for an order block down here. So what happens when we have Asia, we have a low here that didn't mitigate these high volume orders here. So what it did, it mitigated this miss, these early buyers, and it built them up as liquidity, okay? And what's that doing? That's adding to our phase 1, and our phase 1 is for our reversal. It's the end of our mitigation cycle for our order block, okay? As soon as we break that, we can do our lower time confirmations, we can continue up. Now, depending on what's happening to the left here, New York might retest London highs and reverse, lows in this case, then reverse, or it might just go down, retest this order block, and then continue up. So it's all dependent on what happens to the left, but that's the main framework for what happens during London, okay? Let's see a proper example here, different to this, but same idea, okay? So here we have this money being injected to the market, and we have this strong shift, in bullish shift from a downtrend, okay? We create an order block here that follows our rules of having inducement, imbalance, which you have to zoom in and find. Imbalance can be really small, but as long as there's imbalance, there's detachment from orders, okay? So still valid. And impulsiveness, well, obviously this is grabbing all these orders from this movement up here, and it's left it behind, okay? So we know there's still orders at this point. So the blue line's Asia, okay? So what's happening? Well, from this point, we did not mitigate here, but instead we continued to compile those early buyers, okay? Now what's happening here? Well, we're seeing no imbalances. We're seeing everything being efficiently filled in the market, and we're building up and up and up. And then what happens at New York Open is we mitigate, we mitigate a supply zone at the open, break our vector level, create a continuation down, and what happens is we raid the end of the mitigation cycle that Asia built upon, okay, which is here. As soon as we raid that, we break our vector level, and we can have our market structure shift and then create buys from there. So essentially in this case, Asia creates a continuation of our inducement mitigation, and even London does as well, because London doesn't raid that Asia mitigation cycle. Instead, it builds on it for New York to make a bigger move, where we have our trap here and that big move there, okay? Next one is a break and retest, which is impulsive Asia. So this is when Asia creates an order block during its session. Why does it create an order block? Because it actually mitigates the high volume orders from the left. So Asia's actually carrying the buy or sell money, the high volume buy or sell money from the past day, okay? Or past days. And then creates an order block with inducement. Okay, so let's have a look at what's happening here. So in this case, we have a high, we manipulated, and then we mitigated that high. Mitigated, had Asia, we broke structure with Asia, or had an inducement pullback, same concept. And then we left an order block during Asia. Well, this order block is important because it's the last point that's carrying the orders from up here, right? We're mitigating it down. Then what happens is we have that imbalance here, telling us that we've actually detached from the orders of our selling money, okay? Frankfurt, in this case, creates a kind of accumulation-like structure to end up mitigating our order block during Asia, then continuing down, okay? Let's have a look at a random example of this. So here we have a strong institutional move. Why? We have a upside down V shape. So we enter and exit very quickly from a zone, telling us that we're flooding our sellers' money here. Break structure, break another structure, break another structure, lots of sell money injected into the market. We zoom in on what's happening here, and we can find ourselves an order block. We can't see it in this time frame, but if we zoom in into a move like this, we can find some order blocks. Now, why didn't I pick this zone up here? Because the inducement's being created here. If inducement's being created at a certain level, well, the goal of the institutions is to just take it out in reverse. We don't have to waste money as an institution moving all the way up here if the inducement's just here. So we have to find zones near our inducement. That's very important. You can still mark it out, of course, but obviously we didn't create inducement for here. We created inducement for something here with this move, okay? Anyway, this actually happened during Asia, the past day, but we're going to focus on what's happening a bit more here. We found our inducement level that, you know, we still have orders here, okay? And this didn't take those orders here. So essentially we want to access more orders from here using this as our inducement level. This mitigated very nicely, telling us that we've got inducement mitigation. if we're mitigating our inducement level, we're building upon more and more orders, finding more and more early sellers in the market to end up taking out. Okay? So what happened during Asia? Well, prior to the day, Asia built up, and actually mitigated our level and took our inducement, telling us that this money here, think of dollar signs, money injected here is now transferred / mitigated to this point here. Why? Well, we took out our inducement level. Once we take our inducement level, we have an efficient mitigation. So with that, we grabbed it, still in Asia, within this blue, mitigated to here, to here, to here, down to here, pushed up, swept. It's still carrying this money. Well, why is it moving down so impulsively? Well, we got to look to the left, remember? Up here, we're seeing that there's no active zones for us to actually mitigate and react from. Why? Well, let's go through it. Here we had a low, which mitigated to here, which slightly mitigated to here because we pushed in and swept a wick. Now what happened? Well, we had a smart money trap. Like we went over last lesson, if price breaks a level and then mitigates into a range, we have a mitigation. So this acted as a smart money trap for that. But regardless, when we were here and we mitigated this range, we mitigated, keep pushing up. As soon as we have that break, we have that collapse. So this level acts as our build-up, in which there's no opportunities for price to reverse from. So we don't have a nice push-up and setup that we usually have. So that's when Asia can be very impulsive when it grabs those high-volume orders. So in this case, our only opportunity here, Frankfurt mitigated. We had a nice opportunity in Frankfurt, but I usually like to wait for London. This mitigated Frankfurt, so that money's still being carried down. And then we had that final mitigation during London Open, and where we just pushed off because there was absolutely nothing here in which we could mitigate. Okay. So that's the second main variant, and these three variants always kind of happen in their own ways. Okay, and let's look at the last one, AWS, which is our Asian whipsaw. If you think of a whipsaw, it takes out both the top and the bottom impulsively. But what is it doing? Well, with Asia, after Asia, we enter both demand and supply regions and take out Asia's liquidity, so its top and its bottom. We often see a continuation from one side of the manipulation at New York session, most often, okay? So let's have a look at what's happening here. So Asia builds trendline liquidity, creating sell stops for breakout traders, okay? Even buy stops up here, which are created. And then Frankfurt impulsively takes the top out, mitigates the supply here, then takes that bottom out. Now, it's important to note that in this case study, from a live example that we used, this is actually moving up. So we're respecting pro trend. It's very important with an Asian whipsaw to respect pro trend, okay? Frankfurt triggers those possible buy stops and then reverses to the lows with some sell stops here, because people like to trade support and resistance, okay? And it wants to take those people out as quickly as possible. Now, when we have that sweep, we have that manipulation of the low, our market structure shift from our possible vector level, which is our lower time frame, and then our phase 2, which mitigates London, and then we can take buys. Now, instead of taking continuation sells from here, we took buys from here, and that just goes on to what I was saying about pro trend. Okay, we need to respect pro trend when we have a whipsaw, because our momentum is pushing up in this case. So our demand is still stronger than supply. So unless we're reaching a very strong supply zone with more manipulation than this, we can look to respect buys, especially when there's no continuation sells from this zone up here. So let's look at a live example. So what's happening here? Well, we're moving kind of rangy. We're in a sideways kind of direction. This is when the Asian whipsaw is most prevalent, when we're when we're kind of sideways, because it acts as a high and low liquidity source for a more up or down movement. So what do we got to do first? Well, first we got to join our seller's money, which is our supply, and our buyer's money, which is our demand. Okay, so once we're moving up, we do have a demand level down here with possible inducement. Could have grabbed all of that, but refined it. Here we have the same, where we have a demand level with possible inducement from Asia's low, okay, which mitigated up here. So we have some inducement here for here. But what's really important, like mentioned before, we're moving downtrend. So if we hop, this is on the 5 minute, okay, but if we hopped onto the hour, we're moving like this. And like I said, with an Asian whipsaw, most often than not, unless we're high time frame ranging sideways, in this case, we're very bearish. So we have to respect supply's control, okay, with that whipsaw. So our bias is on sells because we're moving down, okay? So what's happening here? We had an order block. This acted as a level of inducement, which mitigated this, which mitigated this. So mitigation inducement, could rule that out. Once we break that, put our low time frame entry, and then we break down. But what's happening with Asia is we use this push up as its low, as an inducement low, to get into this higher volume supply order block, okay? And with this high of Asia, we also swept that, creating that fuel of a move to begin creating its structure for movement. So here's a very nice sell we could have done, because after this swept here into its range, everything became mitigated until this point, okay? So everything's efficient till here, so we could have got a nice sell. Now, what happened when we entered this demand? Well, this is a valid demand, but it just acted as a pullback because we created an order block here within London, created a very nice inducement level, okay? And then continuation sells, respecting bearish momentum and bias. So that's our Asian whipsaw there. My favorite is where Asia adds to phase one, because we can tell that Asia is a source for as liquidity for an order block. Sorry, one sec. Alrighty. So let's apply this to some charts, okay? And let's just have a look at these three setups. So we'll hop into the 5 minute, and we'll just go recently on AUD/USD. That's cool. Okay. So let's look at this day here. So I'll just frame it like this. This day here. So first things first, what's happening? Well, we're seeing a big reaction and movement in Asia from here. But also I'm seeing that this movement in Asia is all mitigated. So it's acting as a build-up, okay, for price to potentially reverse. So we got to look from where we reacted here to create this move. And we reacted from a very nice order block here. Okay. Now, for an order block to mitigate, we need to find its inducement level. So we have a very clear inducement level here for that order block. Now, what else is happening? Oh, sorry. Well, we have a vector level here. If you don't know 100% sure what a vector level is, it's that last valid order block that created that sweep of inducement to mitigate. So
okay,
we grab.
I wanted to know what you mean by vector level. So finally.
Yeah, well, I'll quickly summarize it. That a vector means strong with momentum. Now, when you have a vector level, you see this big push up, very impulsive candles. Well, it's telling us that if we have an order block with an accumulation, okay, well, whoopsies, with an accumulation, okay, which is here, accumulation, and we have maybe an order block here, okay, well, if you're a bank, we want to take out the stop losses of sellers in this accumulation. So what happens is they create a large injection of orders into the market, and impulsively sweep that accumulation very impulsively. That impulsion creates an imbalance gap because it's so impulsive. And depending on how we react to that imbalance gap, something like this, we can take a trade, but we always have to wait for that reaction of that vector level. So it's a vector level because it creates those vector candles into our order block.